Welcome back. Here is your Moneywatch report. Tomorrow morning, the government will release the July employment report. CBS News business analyst Jill Schlesinger joins us from New York to discuss what's expected and how the post-pandemic labor market has defied expectations. So, Jill, just to start off, in the first half of the year, the economy averaged 278,000 jobs a month. So, do you think July will come in at that level?
Probably not. If we go back to June, we had a 209,000 gain. It was the weakest since December 2020. Most analysts believe there'll be a continued deceleration, probably around, let's call it 185,000 jobs in July. And that is purposeful. That's what the Fed wants to see. The unemployment rate should come in at 3.6%, still within a pretty tight range of 3.4 to 3.7%. We've seen that for about a year and a half. Very big focus for the Federal Reserve will be wages. Now, they want to see annual earnings slow down because that contributes to inflation. So we are expecting a two-year low of 4.2% in annual wage growth. That would be fine because with inflation at 3%, if you're making 4.2% more, you're doing okay.
And Jill, you say that some early pandemic era worries are behind us. So tell us about women actually in the workforce.
Yeah, during the pandemic, we were worried that there was something that we were calling a she-cession, right? That working women would see a permanent deterioration of their financial fortunes because they were out of the workforce. Well, heck, it was amazing. As of June, the employment rate for women in their prime working years, this is defined by the Labor Department as 25 to 54, so don't yell at me for saying prime working years. It was the highest on record. Prime age men, they're back to pre-pandemic levels, but they have not reached a record. So women back in the workforce in big, big numbers.
That's great to see. So we also heard about early retirement amid COVID. How has that all panned out?
Well, it's kind of interesting. If you look at workers who are 55 to 64, they return back to the job just as fast as younger workers. In fact, if you look at that age group, that 55 to 64, they are now employed at a higher rate than before the pandemic. But you know what has not come back is the people who are over the age of 65. They've not come back to work in large numbers, and that's despite the fact that there has been high inflation. So the theory on this might be that a lot of those people receive Social Security benefits, and Social Security benefits are indexed to inflation. So they had a little bit of extra money. Maybe they didn't feel like they had to go back to work. But hey, the workforce needs you. So if you're over 65, go on back to work if you can.
All right, I guess that's good to see. Jill, thanks so much for that insight of what we can expect for tomorrow with the July report. Thanks so much. For more analysis, you can go to jillonmoney.com.